Welcome YouTube, welcome to another one of my videos. Just before I dive into this video, what I want you to do is actually subscribe, hit that like button, comment and share with all your friends and family. That would initially help with growing my channel. I would really appreciate it. Okay, so let's dive into today's video. You must be hearing a lot of news about stock split in the air recently, about Apple stock split, Tesla stock split. First, before I talk about the Tesla stock split and Apple stock split, I want to talk about what is a stock split. So a stock split is when a company basically decides that they want to increase the number of shares that is outstanding or investors hold. A company can decide to do a 2-for-1 stock split or 3-for-1 stock split. For Apple decided to do a 4-for-1 stock split, and Tesla decided to do a 5-for-1 stock split. What does that mean? So I just told you that a stock split is basically when a company decides to increase the outstanding amount of shares. When a company A decides to increase a stock split for example, a 2-for-1 stock split, you get one additional share for each share that you already hold. For each stock you have, just times it by 2. So if you have 10 stocks and a company decides to do a 2-for-1 stock split, with that stock split, after the stock split, you're going to eventually have 20 total stocks in your portfolio. Alright, so let me break it down for you again if you didn't quite get that. So let's say an investor holds 10 shares and a company decides to do a 2-for-1 stock split, and that share at the time is worth $100. How many stocks are you going to end up having when the company decides to do a 2-for-1 stock split? After the stock split, you're going to end up having 20 stocks if you hold 10 shares of that company. And what is going to be the price after the stock split? So the price is going to end up being $50. Let me backtrack a little bit for you just so you can understand. One stock of that company, you're going to end up having 2 stock after this 2-for-1 stock split. I'm just using a 2-for-1 example, 2-for-1 stock split. And the value of that stock is going to be worth, for each of those stocks is going to be worth $50. So what do we see happens during a stock split? With a stock split, the total value of your shares is the same. It does not increase and it does not go down. The total value of your stock is the same with a stock split. Also, the total value of the company is the same. Yes, the total value of the company is the same. It does not increase and it does not go down. The value of that company remains the same after the stock split. But what changes during a stock split? The only thing that actually changes during a stock split is the amount of shares is increased. The total amount of shares is increased. There's more supply of the stock shares. Better way to describe it to you, it's going to be, for a 2-for-1 stock split, it's going to be 2 times the amount of shares that you have. 4-for-1 stock split is going to be 4 times the amount of shares that you have. So we talk about what is a stock split. What we need to actually talk about now is why a company do a stock split. So the best way I can actually say is why a company decides to do a stock split is that they want the stock to be more attractive to new investors. They still want the stocks to be attractive. The best way I can describe it to you is in the pizza example. So, for example, you have 2 12-inch pizza. One of those 12-inch pizza is actually cut into 6 slices. The other 12-inch pizza is cut into 12 slices. which one do most people go for? Most people would actually go for the one that is actually 12 slices, because what happens is that they can share among more people than with the one with, say, the 6 slices of pizza. It can share among less people. You can even decide if you want what you want to do with those pizza. You can decide if you want to sell some of those people. You can take 6 for yourself and sell 6 more slices. You see? But you still have 12-inch pizza, same way. The pizza remains the same. The value of that pizza is the same regardless. The only thing that is different is that it's cut into more slices. And the next thing is, which one will most investors go for? The average investors will actually, if they see a stock going for and a stock that is very attractive and a company that is very valuable, for instance Apple, which one will most people buy? If they see the value for one share going for $600, they will rather, and it goes down to $100 and the value of that company remains the same, which one would you buy? The $600 stock or the $100 stock? Most people would actually choose the $100 stock. So that's one of the reasons why Apple decided that they want to do a stock split, so it can keep attracting new investors. And this is going to be the 5th time that Apple is going to do a stock split. And the second reason why most companies would actually do a stock split is because for option traders, because it made the initial investment for option trading is much more cheaper, since you have to do it in a lots of 100 shares. Another reason why companies actually do a stock split is to increase the liquidity of the company. So it makes the company more liquid. In my opinion, stock split is just another way on how companies can shuffle around investors and ownership of the company. So it attracts new ownership, so more people will want to buy that stock, and some people are going to sell their stock. How does this stock split benefit you? This stock split benefit a lot of investors. So investors who are holding Apple for a long time, who have bought Apple before, they're going to see a more increase in the value of Apple now, because right now a lot of people is actually rushing to buy more Apple shares. And after the stock split, even though the value of your stock remains the same, what might happen and what you might see during trading is that the price is going to fluctuate and the price might increase in value. What we're going to see is that a new investor rushing into the market to buy Apple shares because it's much cheaper, it's much more attractive to them. So that's going to cause the price to increase more in value when all these investors start buying the Apple stocks. Alright, how is this stock split actually benefiting a lot of investors out there? As we can see, Apple announced their stock split on July the 30th, 2020. And at that time, Apple was actually trading for approximately $384.76. And ever since they announced their stock split, we can see a lot of people buying up Apple stocks. So there's a huge demand in Apple stocks right now, because anticipating that stock split, which is going to happen on August the 24th, 2020. And we can see people are actually, there's a lot of FOMO in the market, fear of missing out. So once there's a fear of missing out, I would say that the reason for the fear of missing out, because a lot of people who heard about the stock split think that they're actually going to get free money or free stocks holding Apple stocks, but that's not the case. As I explained before, the stock split that you get after the stock split, there's just going to be an increase in the stocks you get, but the total value of your stocks is going to be the same. Investors who already hold Apple stock before are the ones who are going to benefit the most, because they buy it at a cheaper price, at a lower price than what the stocks is going up for now. So the stock price is just increasing because of the FOMO in the market right now. Only thing is that you're going to benefit after, once the price has been reduced, it's going to be more attractive to the average investor. So more investors is going to buy that stocks. So I'm just anticipating more investors buy the stocks after the stock split, making the price even go up even further. So after the stock split and the price is reduced, then the price might go up even more, where people who bought the stocks before the stock split might benefit from that stock split. So that's where people will be benefiting from that stock split. That's what I am predicting. The same thing we can see goes for Tesla right here. So Tesla actually announced their stock split on August 11, 2020. And ever since they announced the stock split, before the stock split, it was at the closing trade was $1,374, and now the price is $2,089.60. So the same thing with Tesla stocks. There's a lot of FOMO in the market for Tesla, and so that's pushing the price going up. So the price is going to push up because of fear of missing out on this stock split. But persons are going to benefit from the stock split because the stock price is going to be more attractive for the normal investor. It's still the same valuation, it's still the same amount of value that you have for your stocks. But what's going to happen is that you're just going to see more of your stocks, a lesser price, and then what you might see is that when more people start buying into the market, you might see the price of your stock go up even further, go up. So that's where investors can benefit from this stock split, and that's why the stock split is very important for investors. An important thing to note is what happens if you buy or sell shares on or after the record date and before the exit date. So if you sell shares on or after the record date, which is August 24, 2020, but before the exit date, August 31st, 2020, what would be happening is that you will be selling them at the pre-split price. So you'll be actually selling your shares at the price before it's split. Okay. At the time of the sale, you will surrender your pre-split shares and you will no longer be entitled to the split shares. So you won't be getting the split shares. So you'll be just selling them at what the price was before you split, before the price split happens. Following the split, the new owner of the shares will be entitled to the additional share resulting from the stock split. So, and what this is saying, if you buy your shares on or after the record date but before August 31st, 2020, what would happen is that you'll be buying the shares at the pre-split price. So you'll be buying the shares at the regular price before the split occurs, and you won't see the initial change, and you won't receive that additional share until August 31st, 2020. So you buy it at the price before the pre-split, and then after the pre-split or on the day of the pre-split, that's when you're going to receive those additional shares, and the price will be adjusted in your brokerage account. With Apple being the first company to be worth $2 trillion in the United States of America. And 2 years prior to that, Apple was actually the first company to be valued at $1 trillion. And then we see other companies following suit. So we see here in 2018, sometime 2018, alright, we see here in 2018 when Apple first reached $1 trillion. So it was August the 3rd, and then 2 years now in August we see Apple reaching $2 trillion. After Apple reached $1 trillion on August the 3rd, 2 years ago, other companies follow suit. The next company was actually Microsoft and Amazon, and then Amazon, and then we see Google follow after. Now Apple is still leading the market capitalization of being the first company to be worth $2 trillion, and now I'm sure other companies going to follow its lead in the future. Pretty much it for today's topic, and I thank you very much for tuning in. So today we actually let's go a rundown of what we talk about today. Today we talk about what is a stock split, why a company do a stock split, how a stock split actually benefits investors. If you haven't subscribed as yet, please subscribe and hit that like button and share with all your friends and family. And stay tuned, I'll be bringing more content and more videos for you guys. Thanks for watching. Be safe.